All right. So we also want to be respectful of everybody's time. So hopefully nobody misses anything big as they're jumping in. So as we go through the presentation, I just want to highlight for technical sakes purposes that we do have the Q&A. You will see at the bottom, you have a Q&A button. So while I recommend that you listen to the information first, as some of your questions may be answered as we go along the way. Feel free to ask your questions at the course of the presentation. Do know that if you are asking something that is like a very, very specific scenario, that we may have to address that separately, but we'll do our best to get to as many questions as possible. So my name is Valeria Biscelli. I am an educator and training advisor with the Connecticut Small Business Development Center. I know I have seen and or met in some way or another some of you that are joining us today. I'm also joined by my colleague Lisa Mercurio today, who will be assisting us when it comes to the Q&A portion. So the focus today of our presentation is to talk about those PPP forgiveness guidelines for loans that are over 50,000 and up to 150,000. So last week we had a session for loans that were 50,000 or under. Today we're covering 50 to 150, and then next week we will cover loans that are over 150,000. So if your loan is smaller, you're certainly more than welcome to stay and listen to what we're saying. Some of the information will apply to you as well. Same if your loan is bigger, but do know that we are doing webinars that are specific to certain loan types because they may require some slightly different guidelines or forms themselves. So let's talk then about, what are those forms that are available. So as you know, when the program was launched in March of 2020, that was like, version 1 with very basic initial guidelines. And as Congress saw how the program was working out and the rollout, and the SBA saw how it was working out, they came back to the table several times and made updates to try and make the process easier, to try and simplify or remove some of the initial restrictions. So, so overall, the program has become friendlier to those who borrowed, but at the same time, because it changed several times, that created some confusion, right? So part of what we try to do when we're covering this information is to try and help you make sure that that you have the latest and most up-to-date information. So the 3 different forms you may be able to see on screen. There's a form that is the 3508S, another one that is 3508EZ, and the first that was released that has been updated based on the guidelines is the longest form, is the original 3508. So all of these forms you can find on the SBA's website, on the Treasury's website, and we also have them available in our Recovery Resources Center. So you will be applying for forgiveness through your lender directly. You're not applying directly to the SBA. Just like when you got the loan, you applied through a lender, and then the lender was the middle person, right? The middleman with the SBA. The same would be with the forgiveness forms. So a lot of lenders have developed their own version of these forms electronically. So while you may want to have these forms as a reference point for you to know what it is that you have to fill out, do know that the lender may have their own form. So you want to make sure that you contact your lender to understand, how you go about the process with them. An important piece here is that you have to apply for forgiveness. It is your responsibility as the borrower of these funds. You have to apply for forgiveness with your lender within 10 months. So the maximum amount of time that you have is 10 months from the last day of your covered period. So if you go over the 10 months and you didn't apply for forgiveness, you'll have to begin repaying the loan. So it's important to know, particularly for those first round loans where many of you may be close to that 10-month timeline, make sure that you don't go over that. So let's go briefly through who can use each form, because when we have all these forms, we want to understand where should we be using one or another. So if you have a loan that is 50,000 or less, you only have to worry about Form 3508S. If you have a loan that is over 50,000 and up to 150,000, and you didn't experience any wage or full-time equivalent reductions, you will use without any issues 3508S. However, if you did experience reductions, whether it is on wages or full-time equivalent employees, you'll still file 3508S, but you will have to calculate your forgiveness amount based on the 3508 loan form. And if your loan happens to be over 150,000, if you did not have any wage or full-time equivalent reductions, you can use the 3508EZ. And if you did experience any reductions, you will use the long form 3508. So again, there's a reason to the madness, right? There's a reason why there are those three different forms. Let's start then by covering 3508S, which is the form that you will be using if your loan is under 150,000. And again, even though this is the form you will file, depending on whether you experience reductions or not, and whether you can avail yourself of some of the exceptions that exist, you may have to use the long form to make your forgiveness calculations, but you will still be filing 3508S. So, as the borrower, if you have an amount below 50,000, if we happen to have anybody in that situation, you have a lot less to worry about. And again, we encourage you to watch the webinar that we recorded from last week. One of the great things about this form, the 3508S, is that it is a lot shorter and simpler. However, you still have to make sure that the calculations are being done properly. Now, if you are part of a larger organization with affiliates, you can only use this form if the combined PPP loan amount received by you and your affiliates is under $2 million. Whether you got $2,000 or $1 million, right? If the combined amount between you and your affiliates is over $2 million, you don't qualify to use the 3508S. Now, the good thing is if we have anybody that is associated with a faith-based organization, your organizations are exempt from the affiliates requirement for the forgiveness forms. So going back to this form, it requires less calculations, fewer calculations, less documentation for eligible borrowers. And the other good thing is that it doesn't require you to show the calculations that you use to determine the loan forgiveness amount. However, what's important is to keep those calculations and to document them properly, as well as all the documents that back up those calculations, because the SBA may request information and documents to review those calculations as part of its loan review process. So basically you have to keep all the related records, regardless of how much documentation you're required to submit on this particular form. And again, once the form is complete, you submit it to your lender. And as I was mentioning, you would want to reach out to see if there's a form that they are using, that they replicated themselves electronically. So let's look a little bit about what's in this form. This section that you see here on screen is the only section of the form where you actually have to input information. The rest of the form is certifications that you are making about the proper use of the funds for the loan. So you can see very little in terms of how much you need to actually fill out. However, it doesn't mean that you still have a lot to keep in mind in making sure that you're accounting for those numbers properly. So we're going to clear out a couple of things that have been confusing. If you're looking for the number for the form to make sure that you're in the right place, that you have the right form, you can see it's right under the title of the program. So that's where you would find the number of the form, both for this one and if you were using the easy form. The original form, the number is at the top in a corner. So another common point of confusion has been about what you can see on the top right, circled right now, which is the expiration date. So the expiration date is not related to the timeline that you have to submit your forgiveness application. This is only an internal date created to follow with the Paperwork Reduction Act. So the SBA will continue to update those dates. Right now, the screenshot that we have that you can see says July 31st. The latest ones say September. Again, it's an internal date set for compliance with the Paperwork Reduction Act. It has nothing to do with when you can apply by. And no changes are expected to the forms themselves at this time. So let's review then what is the information that they're asking you to fill out. So the first part is pretty self-explanatory. It's basically your business name or your personal name if you were filing as a sole proprietor, using your own name, DBA if you use one, the address that you use for your business, the business's tax ID number, or your social security number, depending on what corresponds, business phone number, email address, and a primary contact. So if you have more than one owner involved, somebody would be assigned as the contact person for this. Now, on point number 2, our point number 2, they don't have points, they don't have numbers there, but this made it easier to break it out. So they will ask you for 2 loan numbers. When you applied for your loan, you would have gotten a loan number from your lender and then a separate loan number from the SBA. So those will be found in your closing documents. You can go back to them to pull them up. They will be important for you to have. They're necessary as part of the process. So go back to your closing documents and you'll be able to retrieve them from there. Then the next piece of information, the next line of information that they're asking for includes the PPP loan amount. Most of you probably know it by heart. But if it's not an exact number, right, you may not remember to like the dollar amount. So if you don't, you would also be able to find in your closing documents the exact amount. And then they will ask you for the disbursement date. And the disbursement date is basically the date that the lender deposited the funds in your bank account. Right? And that date is important because it also is involved in the cover period, right? The cover period clock starts from the date that you receive the funds. So the next one has been a point of confusion sometimes as well. They're asking you for the number of employees at the time that you apply for your PPP loan. and then the number of employees at the time that you're applying for forgiveness. Now, this number is not related to the forgiveness amount. These are not numbers used to determine forgiveness. They basically help verify eligibility and provide the SBA and Treasury with a data point that is designed to help track the impact of the loan at large. So those numbers are not related to your forgiveness amount. It's just the head count of how many employees you had when you applied to get your loan and how many employees you had when at the time that you're applying for forgiveness. Then the next line asks you for your covered period. And there have been many changes when it comes to the covered period. Initially, you only had 8 weeks, right? Then a flexibility act was passed and they gave you the choice of 8 or 24 weeks. And then when the Economic Aid Act was passed back in December, they actually added flexibility, and you can choose your cover period to be anywhere between a minimum of 8 weeks and a maximum of 24 weeks. So your somebody's cover period could be 8 weeks, somebody else's could be 10, 16, 20, 24. Again, the minimum 8, the maximum 24, but you have the flexibility to choose the cover period based on what works best for your business and the use of the funds during that time. So this is, one of the important things to know, and that has changed several times. And what is great about this form, and you can see that note about the affiliates that I was mentioning before. You have a box to check if you with your affiliates borrowed more than $2 million. So, but again, what is great about this form is that if you used all your funds and you didn't have reductions in your employee count or wages, your forgiveness amount should match your loan amount, right? Now, of course, the forgiveness amount cannot be larger than the amount that you borrowed, right? So the calculation needs to be done and certified. So you want to make sure that you understand what the eligible and not eligible expenses are for both payroll and non-payroll costs. If you have looked at prior forms, you will probably notice that there's no longer a mention of listing your EIDL advance. That is also an important change. The Economic Aid Act removed a requirement to deduct your EIDL advance from your PPP loan amount. So you no longer need to worry about this. If you apply for forgiveness already for your first round PPP before this change was made, there is a process in place for lenders to no longer collect this amount from you and refund you anything that you may have paid that is tied to the EIDL advance. So if you're in that situation, do reach out to your lender to get it corrected. But again, note that this is not about the EIDL loan, right? It's only about the advance that was like a grant portion of the program. So again, regardless of whether you had changes or not, you still have to certify and potentially demonstrate, if you're asked to, that you spent the funds properly and following the guidelines of the program. So let's make sure that we cover those amounts eligible for forgiveness, both related to payroll and non-payroll. So when it comes to payroll, most of these amounts have remained the same, with a couple of exceptions. So as of the passing of the American Recovery Plan in March of this year, and with the expansion of the employee retention tax credits, you need to keep in mind that you cannot claim a credit for any wages that you already covered with PPP, and vice versa, right? If you have wages that you want to cover, that you want to get an employee tax retention credit with, then you can't use PPP for those. So there's also an extension of COBRA benefits, and the same applies. Like, you can't cover COBRA benefits that you're going to take that credit for with PPP funds. So overall, payroll costs include salaries, wages, tips, vacation, compensation for vacation, bonuses, hazard paid, anything that is related to cash compensation that you would basically look at your employees' gross wages and use the gross wages to pay your employees the same that you report on your 941s. The only caveat here is that the overall cap is 100,000. Right? So when you add up their cash compensation, the annualized cap is 100,000. So whatever amount that you pay them over 8 weeks, 10 weeks, 15 weeks cannot exceed an annualized amount of 100,000. So as an example, we have something listed in there. So if you had somebody using an 8-week, if your business is using an 8-week period, the maximum that you could pay an employee would be 15,385. And where this number comes from is if you had an employee that, let's say, was making 105,000, right? You can't pay them over the 100,000. So this is 100,000 divided by 52 weeks times 8, right? So technically what you're basing it on is on the actual employee's compensation, right? So if somebody makes 80,000 a year, you grab the 80,000 a year, divide them by 52, multiply by 8. That's your maximum compensation for those 8 weeks, right? And of course, you could add, if they had a hazard pay, if they had, bonuses, things like that, as long as you don't exceed the 100,000 amount. And similarly, with the other end of the extreme, if you had somebody using a 24 covered period, the maximum that they could pay somebody is 46,154. The calculation comes from the same place, 100,000 cap, right? Divided by 52, multiplied by 24. That's where that 46,000 cap comes from. Again, this is for employees, not for owners. There's a separate cap for owner compensation, which we're going to talk about next. But this is only for employees. So there are some benefits that are also covered for employees, and this don't always apply to owners. The applicability of some of these benefits for owners depends on the legal structure of the business. So somebody filing as self-employed, a Schedule C, will have different requirements than an S Corp or a C Corp. So if you have questions about that, do reach out via email about your specifics. But overall, these are benefits that you can cover for all your employees. So these are healthcare expenses, anything that is related to healthcare expenses. This could be medical insurance, dental insurance. It's not limited to just like a health compensation. Retirement contributions are also eligible, and state taxes on employee payroll, otherwise known as SUTA here in our state. When it comes to the owner compensation replacement, again, calculated on your 2019 or 2020 compensation, the forgiveness is limited to in a couple of ways, right? So if you're using a cover period that is 10 weeks or less, so less than 2.5 months, you would calculate the owner compensation cap as the number of weeks divided by 52, right? So again, the same $100,000 cap applies. So if as an owner, you made $80,000 a year, you would divide the 80,000 by 52 and then multiply it by 8, 9, 10, right? So up to 2.5 months, depending on what your chosen cover period is. So the maximum you could get based on that with the 100,000 cap is also that 15,385. If your cover period is longer than 2.5 months, so 11 weeks to 24 weeks, the calculation is different. is based on months. So you would take the overall amount that you made for the year, whether again it's 2019 or 2020, you would divide it by 12 and multiply it by 2.5. So again, with that 100,000 cap, the maximum that you would get is 20,833 per owner. And what's an important thing to know here is that this is a limitation per owner in total across all businesses. So if you own multiple businesses, that 20,833 is still the maximum that you could get from PPP overall. So let's look then at the timeline, and that's an important piece as to when you're supposed to spend the monies related to payroll. So payroll costs have to be paid or incurred during the 8 to 24 weeks following the disbursement of the loan, right? So this is, again, what we talk about the cover period. That's the definition of the cover period. So because that additional flexibility was created, where you can choose the number of weeks that you use, there's no longer an alternative cover period. So the clock starts counting on the day that you receive the funds. Payroll costs are considered paid when you distribute your paychecks, or if you do electronic transactions when you start a direct deposit transaction. The definition of an incurred payroll cost could be, for example, during the last pay period of your cover period. And I'm sorry that we have a typo there, that we kept the alternative payroll period, because that does not apply anymore. So again, it's if you have a last pay period that maybe covers, like let's say you pay bi-weekly, right? And you have, one of those weeks falls within your cover period and the other one falls after, right? So you can still cover that week of payroll even if you pay for those costs later because you have a bi-weekly payroll, right? So you can pay for that 1 week that still falls within the covered period. So in general, payroll costs are considered incurred when the employee earns the pay. So there's also a set of non-payroll costs that are eligible for forgiveness. And this has also changed. Initially, it was limited to interest on mortgage, rent payments, and utility payments, and those are still in place. You cannot cover the principal of a mortgage if you have a mortgage for like a business building, but you're able to cover the interest. If you have a lease, you're able to cover rent payments for your business and utility payments, as long as service agreements for all those were in place before February 15th of 2020. As a clarification, utilities are defined as electricity, water, transportation, telephone, or internet access, again, for service that began prior to February 15th of 2020. So nothing else is allowed as a utility expense. Now, under the Economic Aid Act, in December of last year, there were other expenses that were allowed to be added to the mix here. Now, the important thing here is that the overall rule of the program remains, which is that you have to spend a minimum of your total PPP funds of 60% on payroll expenses. And then the remaining 40% can be used on eligible non-payroll costs. So there's no limitation on how much money you can use towards payroll, right? You could use 100% for payroll. You could use 80% for payroll, that's fine, right? But if you fall below that 60% minimum, whatever falls below, even if you're using it on eligible cost, you will have to pay. So if you only use like 50% for payroll and 50% for other expenses, that 10% you will have to pay back, even if you used it on eligible expenses. So for some businesses, that could have been a strategic decision, where they said, look, I need the cash flow, right? I need the working capital. So I know I'm going to have to pay it back, but I still need that extra 10% to pay my rent or to pay, an expense that I'm behind on. And it's fine. You just have to know that that it is something that you will have to pay back under the guidelines of the program. So when it comes to this new covered expenses, we have covered operations expenditures, and this is mainly centered around business software or cloud computing. It could be software or cloud computing that helps you with your business operations, that facilitates product or service delivery, that helps you with processing, paying, or tracking payroll expenses, human resources. So again, but it's all software or cloud-based, right? Sales and billing functions, accounting or tracking of supplies, inventory, records and expenses. So let's say, for example, you use like QuickBooks Online, right? So that's a business software, or you just use QuickBooks in general, and you happen to pay for your license during the time that you had your payroll expenses, your cover period for your loan. You could use those funds to pay for that, for example. If you use, let's say, an application that helps you with processing payroll, you could also use the funds for that. There's also something for covered property damage costs. This is very specific. It's related to property damage or vandalism, looting during the public disturbances that occurred in the summer of 2020 that were not covered by insurance or other compensation. We were very lucky in our state to not have that type of damage. So it'd be very rare for a business in Connecticut to be able to use that, but it was included in the legislation. There's also some covered supplier costs, and these supplier costs have their own timeline, depending on the type of cost. So the covered supplier costs are defined as expenses that you as the business owner made to a supplier of goods for goods that are considered essential to the operations of your business at the time when you're making that expense. And they're made based on a purchase order, contract, or some kind of order that was in effect before the start of your covered period, right? Now, the only exception here if these are perishable goods, right? So like if you have a restaurant and you were buying food, right? Maybe you have like a weekly purchase order. If you're using a 24-week period and you order something before it started, it's definitely not going to be good by the end of those 24 weeks, right? So if you had perishable goods, the orders could be in effect before or at any time during the cover period, right? But if it's non-perishable, it has to be orders that were in effect prior to the start of your cover period. So again, they have their own timeline. When it comes to covered worker protection expenses, is any operating or capital expense that helped you adapt the business activities to comply with either the requirements or guidance issued by Health and Human Services, by CDC or OSHA, or equivalent requirements of guidelines like our state came up with their own sets of guidelines per industry, right? Based on the federal guidelines and recommendations. So as long as they were related to that compliance, to protect your workers, you can use funds towards that. So it could be, the purchase, maintenance, or renovation of assets, like creating a drive-through window facility, for example, an indoor, outdoor, or a combiner filtration system, a physical barrier like a sneeze guard, an expansion of additional indoor or outdoor or combined business space, having an on-site or off-site health screening capability. So if you spend, for example, on thermometers to check the temperature of people coming into your business, that will be covered. PPE, right? Any personal protective equipment, mask, respirators, any kind of similar protective equipment. The only thing that it doesn't include is residential, real property, or intangible property, right? So if the expansion included residential, you can't include those amounts into your PPP loan amount. And when it comes to a timeline as to when you have to have spent those funds, if again, we have that exception for the supplier cost that we just talked about. The other non-payroll costs have to have been paid during the cover period or incurred during the cover period and paid on or before the next regular billing date. So think, for example, an electric bill, right? If you have a cover period that ends May 15th, maybe you have an electric bill that, the timelines for the electric bills are a little weird sometimes. So maybe your electric bill period for calculating ends like May 25th, right? And you don't have to pay it until like June 15th, right? Your cover period ended on May 15th. So you can cover all of your expenses for the electric bill up to May 15th. You can prorate it, right? And then you will have the evidence of paying it on June 1st. So as long as, even if you paid it after the covered period, as long as it was the next regular billing date, you can still use the funds for that portion of the bill that falls within your cover period. So again, it's getting a little bit into the hairs of it, but some people may be in those positions, and we want to make sure that you are calculating it properly so that if they were to come back and ask you for evidence or support of your documentation, that you have the right calculations and the right information. So what we're going to cover now is the potential forgiveness reductions and how those reductions may impact the amount that you can request in total for forgiveness. So the first piece, the first 4 bullet points apply to everybody, regardless of the loan amount, right? So some of these are self-explanatory, cover them before, right? So if you use the funds for expenses that were not allowed, you will have to pay back that amount. If you used them outside of the correct timeline, it's going to be the same. If you didn't follow the 60-40 rule, you're also going to have to pay back the difference. And in some cases, particularly earlier on in the program, some people applied for amounts that were larger than what they qualified for, because there were a lot of misunderstandings about how the program worked. So the SBA is carving guidance for people that make good faith mistakes, right? So it's a difference between a good faith mistake and intentional fraud, right? If there's intentional fraud, obviously we're entering into a whole different layer of trouble. But there's a lot of people that would have made unintentional mistakes. For example, including independent contractors in the amount of the loan, that in the payroll calculations that they were using to request a loan amount. And independent contractors were never allowed to be added to payroll cost, because independent contractors could go and apply for a loan of their own. Right? But again, there was a lot of confusion around this. So some people may have received an amount larger than what they were supposed to. Also, another common mistake has been people failing to cap salaries at 100,000 when they were applying for the funds. That was also part of the calculation. So getting more money than they were supposed to. So if this happened to you, if you received more funds than you were meant to, whether it was your error or maybe a lender error, the excess amount will not be forgivable. You'll have to begin payments on that portion of the loan. So you may be able to be forgiven for the rest, but obviously if you receive more than you were supposed to, that amount will have to be paid back. And the last piece will apply for anybody that has a loan over 50,000. If you had a reduction in employee hours, also called FTEs or full-time equivalents, or wages, you will have to repay funds as well if you can't avail yourself of some of the exceptions that have been carved out. So I'll dig a little deeper into that. And I know this is a lot of detail and it can be overwhelming. It's just a lot of things that are important to know. So my suggestion would be that, again, we're recording this. We will make it available within a couple of days so that you can sit back with it and watch it again. But also, if you have questions about how to go about it and how to apply some of this to your specific circumstances, don't forget that we provide no cost advising, right? So we're here to support you and we're happy to help you. We have a team of advisors that is ready to help you so that you can feel at peace with how you are presenting your calculations and your information to make sure that you don't have any problems with the application itself. So all these exceptions, this first set of exceptions qualify you to still use Form 3508S without having to calculate with the longer form. So these are statutory requirements concerning the reductions of full-time equivalents or employee salaries. So this was put into the law, right? So it's not something that the SBA can do anything about. It's how the program was created. So it's important to understand how this exceptions that were put together are carved. So if you had no reductions in annual salaries or hourly wages for any employee by more than 25%. So there was a 25% wiggle room allowed, right? So if you had to reduce wages a little bit because you didn't have a lot of business activity, as long as you didn't reduce them by more than 25%, compared to the most recent full quarter before the cover period. And that you meet one of these other two conditions, that you had no reductions in the number of employees or average hours paid between January of 2020 and the end of your cover period, or you can demonstrate the inability to operate during the cover period at the same level of business activity as before the declaration of the disaster, February 15 of 2020, due to compliance with requirements or guidance issued by, again, Health and Human Services, CDC, OSHA, for customer or worker safety. So this is something that a lot of our small businesses should be able to avail themselves of, because the state mandated, following those guidelines from the federal government, mandated a significant shutdown, right? So a lot of businesses were closed. A lot of businesses were not 100% closed, but could only open for maybe pickup, right? Like I'm just thinking, for example, a restaurant that, they couldn't have any operations, they couldn't have any seating operations, but they were maybe using, pickup or delivery. But obviously, if you were in that situation, your level of business activity was probably significantly less than before, right? So if you can demonstrate that based on those restrictions, your level of business activity was much lower, right? You couldn't open at the same level of business activity as before February 15th, right? Then as long as you didn't reduce those salaries or wages by more than 25%, you can demonstrate that, then you don't have to worry about using a longer form for calculations, right? You just document everything, you certify everything, and you should be good to go. So how, if you don't satisfy these requirements, and are potentially subject to reductions in your forgiveness amount, you have to follow Form 3508 and its instructions to calculate the final forgiveness amount that you can get. You don't have to submit Form 3508. You don't have to submit the loan form or any of that related documentation with your application. But again, the SBA may request it, so you have to keep all of it. So let's look then at the forgiveness reductions and the exceptions for the forgiveness reductions as stated in the guidelines of 3508. So first of all, important to understand how they defined full-time equivalents. For forgiveness reductions, a full-time employee is defined as a 40-hour week. Some of you may have a 35-hour employee and you may consider them full-time at that point. The SBA just said full-time is 40 hours. So now if you have somebody that worked 35 hours and they still work 35 hours, there's no reduction, right? So it doesn't matter. The difference is if you did have reductions. So you have to choose how you're going to calculate your full-time equivalents, and you have two ways of doing that. You can choose as a quotient of 1. So if you have somebody that works 30 hours a week, right? 30 divided by 40, you get 0.75 of an FTE. The other choice that you have is to count anyone that works less than 40 hours as half of an FTE, right? The important thing here is after you choose one of those methods, you want to keep it consistent to calculate the potential FTE reduction. So because this is going to be across all of your employees. So something important to know is that a lot of payroll processing companies and even QuickBooks have reports that you can pull out for PPP that can show you your full-time equivalency for both, for if you calculate it as a quotient and if you calculate it as half of an FTE. And it's good to look at because it will show you which one may be more advantageous to you. So after you choose one of those methods, the next step is to choose a reference period. You have 2 reference periods that you can choose. One of them is based on 2019. The other one is based on 2020. So you can choose as a reference period to compare how many FTEs you had during your cover period to what it was before. So the reference period of before could be February 15th to June 30th of 2019, or if it reflects more closely the number of employees of your cover period, it could be January 1st to February 29th of 2020. If you are a seasonal employer, you can pick either one of those methods, or if it matches your seasonality better, you can choose a consecutive 12-week period anywhere between February 15th of 2019 and February 15th of 2020. And the idea is that you would choose a period that matches more closely the seasonality of when you applied, right? And when your covered period falls. And then the reduction would be a percentage of your overall FTEs. So for example, if in your reference period, whichever one you select, you had 10 full-time equivalents and you reduced your count to 8 during your cover period, the percentage decline will be 20%. So only 80% of your loan will be eligible for forgiveness. When it comes to how to avoid this, again, is safe harbors, what they call safe harbors. The first one we covered already because it falls under one of the exceptions, which is being able to show that reduced level of activity due to compliance with those federal agencies, and its guidance issued between March and December of 2020. If your loan was made before December 27th, and if your loan was made after December 27th, because that's when the Economic Aid Act was passed, is guidance issued anywhere between March of 2020 and the end of your covered period, right? So that is one way of avoiding your having to count those reductions. The other potential way of avoiding it is you have to see if you qualify for the safe harbor. So you will look at your average FTEs between February 15th and April 26th of 2020 and write down that number. Then you will look at the total FTEs during the pay period that includes the declaration of the disaster, February 15th of 2020. If your FTE is larger in the pay period that includes the date of the declaration of the disaster, then shortly after, and you restore your FTEs, either by December 31st, if the loan was made prior to the Economic Aid Act passing in December, or the last day of a cover period, if the loan was made after, then you qualify for an exemption because they consider your reduction in staff temporary, right? So you would have to take the steps, but again, it's about restoring the numbers to what they were before. So as long as you can show that you did that before the end of your cover period, you should be able to take advantage of that safe harbor too. The other potential set of reductions is based on wage forgiveness. And again, I know I'm throwing a lot of information at you. We may go a few minutes over. I hope that you can stay. We are doing our best to cover a lot of detailed information in as concise a manner as possible, but I also don't want to rush through these concepts and make them more confusing because I know it's a lot of detail to begin with. So I apologize if we do run over a few minutes. We will make sure to try and stay and answer a few of your questions as we get towards the end. We only have a few more slides left, but I want to make sure that these things are clear. And please know that we understand how much detail goes into this. Trust me, we've been the ones like reading everything and trying to put all this together for you in as clear a manner as possible. We know there's been a lot of changes, so we're here to support you and to help you. Don't feel like now you have to go and fill out this forgiveness application on your own and you learn about all these things and you don't even know where to start. Like, you can go back and watch the recording again, but also you can reach out and sit down with an advisor virtually, most likely, but you can sit down with an advisor and walk through the specifics of their situation so that you don't feel that you have to stress out about every single detail. Like, we can help you with this. So if you had forgiveness reductions, again, this applies to those in excess of 25%. And this is on a per employee basis, not in the aggregate like the FTEs reduction. So you have to count reductions for any employee as long as they were not paid more than 100,000 in 2020 or in 2019. Those employees that are normally paid more than 100,000 don't have to be counted towards the wage reductions calculations. So if you did reduce wages over 25%, your forgiveness amount will be reduced by the total dollar amount of salary or wage reductions that are in excess of the allowed 25%. So if you cut somebody's salary or wages by 30%, then that 5% is going to have to be paid back. So as an example, if you had a full-time employee that was getting $1,000 a week, right? And based on the prior quarter, right? And you had to only pay them like $700 because you just couldn't afford, right? You have to pay them $700 a week during your cover period. We're not saying like, you reduced hours or anything. So we're not involving like the changing hours that will be the FTEs, right? So they worked the same hours, you just couldn't pay them the same. So the first $250 here would be exempted from the reduction, right? Because that's 25% of the $1,000. But you have an additional $50, right? Because you cut it to $700 per week that would not be eligible for forgiveness. So you will multiply this $50 times the number of weeks of your cover period. So if you had 8 weeks, it will be $50 times 8. So there's $400 that you would have to pay back. If you had, 10 weeks, it will be $500 and so forth, right? So you multiply the number of weeks by the total amount of your cover period. And again, it's that amount in excess of 25%. So if you cut somebody's salary to like 800 from 1,000, you don't have to worry about it. But if it was more than 25%, then that's where you have to calculate this and pay back the difference that is over the 25%. Now, there's also safe harbors for this. And the safe harbor is similar to the one that we were just covering before for FTEs. You have to write down the average annual salary or wage between February 15th and April 26th of 2020, and then write it down for the period that covered February 15th of 2020. So if you can show that this reduction was temporary, so if the wages were higher before than after COVID, and you show that you're restoring the wages either by December 31st, if your loan was made prior to December 27th, or by the last day of the cover period, if it was made after, then it's considered a temporary wage reduction. So you don't have to be penalized for this. So we have a quick walkthrough of what the Form 3508 looks like, because that is what you would have to use for calculating your FTEs or salary reductions. So mainly is page 4 of the form that starts with a couple of tables that help you list your employees. And as you can see, you list, you're not presenting this form, right? So you don't have to do it in the same way as if you were presenting it, but you may want to for clarity's sake, right? So you include the employee's name, identifiers, the last 4 digits of their social, you write down their cash compensation. So this is not benefits, right? Just cash compensation. So what is in the gross wages of their paycheck. And then the average FTE based on the method that you chose, whether you chose the one, the one or the ratio of one, or the half of one for anybody that was part-time. So again, if you had to reduce staffing and you offered somebody their job back and they refuse to come back, you have to document this, but you don't have to count them as reductions. If you had people that were fired for cause, that voluntarily resigned, or that voluntarily requested a reduction in hours. Some people maybe were dealing with childcare or taking care of family, and they needed less hours. So as long as you have all this documented, then you don't have to count as a reduction in FTEs, people that voluntarily requested their hours to be reduced, or that they resigned, or that they were fired for cause. The only thing that you have to make sure is that you have to have reported them to the Department of Labor if you offered to restore their job, to rehire them, and they say thanks, but no thanks. So all of that has to be documented. And as you can see, you just write your average FTEs, you write the salary and wage reductions, again, only if there were reductions, right? So if you had people, if people didn't have a reduction over 25%, you wouldn't put anything in that particular box. You would only put the reductions for those that do have a reduction. So, and then table 2 is for people that made over 100,000 traditionally, because they count for the FTEs, but their salary reduction does not count. That's what I was mentioning before. So the next piece of this is the page prior, which is called Schedule A. And what this does is basically helps us bring the numbers from the tables, from, you can see at the top, table 1, table 2. So it basically helps you bring the numbers from that table and add the compensation of the owners, and basically help calculate your FTEs and calculate your reductions here based on this. And again, if you're able to avail yourself of an exemption, right, you don't have to enter the reduction. You just enter a 1 and move on. And then the last page is the last piece of this, which is the front page. Basically helps you calculate by how much your loan forgiveness may be reduced. And again, it shows you the safe harbors that we talked about. It covers those explanations so that you're aware of the safe harbors and you can avail yourself of them if you qualify. And it helps you calculate what your total amount forgiven, your final total amount forgiven may be based on which of those exceptions you can take advantage of and which ones you can't. So again, you wouldn't file this form if your loan is under 150, but if you have some of those reductions, you may have to use it to calculate how much of your loan you can actually get forgiven, so that when you go back to where it asks you for the loan amount and the forgiveness amount requested, that it's properly calculated, and then you keep all the documents so that if anybody comes back to you with questions, you have all those documents and you can show how you calculated that. So keeping it brief, again, I know that we covered a lot, so moving on to the next slide, we're happy to assist you. Oh, I had already talked about this, sorry. We're happy to assist you with whether it is with the simplified form, or if you don't qualify for the simplified form, to walk you through all those calculations, help you verify those numbers and understand your options to maximize forgiveness as well as possible. We have been doing this on the next slide. We have been working very hard, particularly during COVID, to try and assist as many businesses as possible in accessing these funds and then getting the appropriate forgiveness. But please know that there's other things that we help small businesses with. So if you have people that are looking to start a business, or people that are in expansion mode and are looking for other support, we have teams of advisors that are ready and able to help you with all those things as well. And we're going to try and tackle a few questions. If you don't mind, Lisa, we'll stay maybe for another 5 minutes or so to try and tackle a few of the questions. If you want to be connected to an advisor, you can send me either an email from the training reminders that I usually send, or you can email our general inbox. And don't forget to follow us on social media to stay up to date. So the last slide has our email address in case we don't happen to get to your question, or if you have a question that has more specifics that you want to be able to debrief. And of course, we can always recommend that you work with an advisor if we think that that might be the best solution for you. So Lisa, thanks for everybody's patience again, as we did our best in covering all this information. And Lisa's going to help us go through some of those questions.
Yes. So, and a lot of the questions did get answered in the course of the presentation, but one is, our bank closed the portal for forgiveness for the continuing route of PPP2, and the forms are being changed. We were told to wait. So if we are over the 10-month, how does that affect us?
So I will reach out to your lender again to ask them as to where they're at. I mean, yes, they're correct that even up until December, the forgiveness forms were being changed. So it is a precaution that some lenders did use. But after December, there were no longer any changes in the forgiveness forms. However, if you have not been able to apply because your lender doesn't have the forms available, that should be something that they can make aware the SBA too. So you should be okay. But I wouldn't delay contacting them to see where they're at so that you can apply, particularly for that one that is already over the 10 months.
Great, thank you. You did go over this, but I'll mention it just in case.
Yeah.
How do you know when your covered period begins and ends?
So again, the cover period starts when you receive the money from the bank. The day that those funds are dispersed in your account, that is day one. And it ends at your choice, anywhere between 8 to 24 weeks. So you can choose a period that suits your type of business best.
Great. Our original payroll was based on 5 employees, but we only paid for 4 during this time. The entire PPP loan was totally spent on payroll during a 17-week period. This should be forgivable, correct? So it was
So you have a reduction of 1 employee. So it's going to depend on whether you can document falling into one of the exceptions that I was presenting earlier as to whether you can get forgiven for the whole amount. Technically, when you have a reduction of an employee, right, you have to repay based on your reduction. But again, because there are all these different exceptions carved, I think that it would be advisable to discuss perhaps with an advisor as to how you can take advantage of those exceptions and see if you can avoid any penalties for the reduction in the number of employees.
great. And then similar questions on this. Are these forms and the information the same when applying for forgiveness for the second PPP loan?
Yes.
What
The
about
rules
tax?
are the same. The one thing that is important to mention that it slipped my mind to mention is that if your loan was under 150,000, when you were submitting the paperwork for your second PPP, you are not required to present the paperwork that documented your 25% reduction at the time of applying for the loan. However, if you didn't, when you go to apply for forgiveness, you will be asked for the paperwork that shows that 25% reduction. Because that is one of the things that was a qualifier, right, that determined your eligibility for the loan. So if you can document that 25% reduction, you're basically not eligible. And if you're determined not eligible, you will have to pay it back. So that's important to know. But other than that, the information and the forms are all the same, whether it's a first or a second loan.
This one might need some clarification, but we had a layoff and wage reduction in 2020. But since then, we have not had any other reductions. This is our second PPP loan. Do the layoffs and wage reductions from July of 2020 impact the calculation of forgiveness in 21? It's the second, yeah.
Right. So wage reductions are based on your most recent full quarter before the covered period. So if a wage reduction was from 2020, it probably won't impact your 2021 PPP. The layoff, however, again, you will have to see if you can avail yourself of one of those exceptions, because technically, if you needed the people, right, you would have found somebody to replace that person. So if you never replace them, then you have to say why, if you got money that was meant to pay for that person, right? So you might be able to avail yourself from one of those exemptions that we were talking about, and we can help go through that with you. But you know, that is that because the reference periods for the FTE calculations are still based on 2019 and 2020, that could impact you. So so you know, we can discuss that in more detail, but the wage piece, you should be okay. But the layoff, you may have to look at the exemptions and figure out if you can avail yourself of one of those.
And there was a question about taxes on real estate.
I don't know what
Well, yeah, I have a feeling it might be under the
whether that is an eligible expense.
Correct.
No, it's not.
Okay, and last completed forgiveness for our first round, fully forgiven. I applied for second in March 21. Could there be any interaction between the ERC program and the PPP that I should pay attention to?
Yeah, and that is something that I briefly mentioned when we were starting to cover what is eligible and not eligible. And it's that you can't cover, you can't ask for a credit with the Employee Retention Credit Program for wages that you already paid with PPP. And vice versa, if you requested a tax credit during a particular quarter with the retention credit, then those are wages that don't qualify to be covered with PPP. So there can't be overlap of use.
And then, you did address it, but just to clarify, what about having a service fee that the payroll service charges us as a deductible expense?
No, only software. So if it's software based, if you're using like, if it's software, software is eligible. If it's just like somebody that you hire to process your things, like a bookkeeper, right, that you pay to enter your information, that doesn't qualify. If it is software or cloud based, it does.
And then this just came in, so I'm thinking we need to review it again, but when will we be able to apply for forgiveness on our second PPP loan?
So the timeline is the same. You can apply right away. Like you can apply, as soon as you used up the money, like the end of the covered period, or even before the end of your covered period, you can apply, but you have a limit of up to 10 months to apply. So if you've already used the funds and you are, at the end of your covered period, you can apply. But just remember that you have a limit of 10 months to apply. So you can get rid of it sooner rather than later. But if you want to wait for any reason, then you have up to 10 months to do that. So
Okay.
Again, I apologize that we run a few minutes over. I wanted to stay to make sure that I could address some of your questions. I know there's just a lot of information in here to unpack. So we will have the recording available on our website within a couple of days. We usually have somebody go over it to make sure that the audio quality is good. So it takes us a couple of days to post it, but I will be sending an email to let you know once that is available. And you can also monitor our website under the Learning Center. We have a list of videos in the on-demand section. So as soon as it's available, it will be posted there as well. So thank you so much again for joining us. I hope that the information was helpful and useful, even though I know it's a lot. Do know that you can reach out and that we're here to help you and support you. I hope you have a wonderful rest of your day, and thank you, Lisa, as well for your help. Have a good day, everyone.